Greetings everyone, I'm Nova Lui, Head of Investors Advisory at RHB Bank. Thank you for joining us for our Q4 2023 Fund Discoveries idea. In the third quarter, the equity market maintained a range-bound trajectory. Surprisingly, KLCI saw an increase of 5.26%, making it the standout performer among the markets we monitor. Following closely was the Nifty 50, representing the Indian equity market, which experienced a 2.67% uptick. Our focus in Q3 was primarily in Malaysia and India equity funds. Now, let's delve into the industry fund flow in the quarter 3. Malaysia's bond fund emerged as the top performer in terms of inflow over the past quarter. This suggests that investors may be under the impression that Bank Negara Malaysia could have reached the peak of its rate hike cycle. Within the foreign fixed income category, global bond funds were favored over Asia Pacific bond fund. The Global Technology Equity Fund stood out as the most preferred equity fund, while Malaysia Equity was the least preferred in quarter 3. There was a net outflow in Chinese equity fund during quarter 3, however relatively small compared to the still substantial net inflow of 1 billion over the past year, making it still the highest inflow in the entire industry over the past 1 year. Heading into quarter 4, we are slightly favoring fixed income over equity, with bond expected to benefit most from the peak of the rate hike cycle. Within the equity realm, there is still huge potential for growth in global technology equity, particularly strategies that incorporate artificial intelligence. The Federal Reserve is nearing the end of its policy tightening phase. The next catalyst for the US financial market is expected to be policy easing, which should lead to an upward movement. For investors interested in the global equity fund, consider the RHB Global Sharia Equity Index. This type of fund is designed to track components of financial market indices such as the Dow Jones Islamic Market Titan 100. Index funds offers broad market exposure, low operating costs, and minimal portfolio turnover. This particular index focuses on the top 50 US stocks, the top 25 European stocks, and the top 25 Asian stocks. These global blue-chip companies are financially robust and capable of weathering the challenging business environments. The tech sector comprises a significant portion of the index holdings. The fund has its highest exposure in the US equity market with a notable bias towards technology. The top holdings are primarily mega-cap technology stocks. For investors willing to take on higher risk, there's the option to delve into the sectoral funds, particularly those focused exclusively on the technology sector. We have two suggestions: TA Global Technology and RHB Sustainable Future Technology Funds. Both leverage on the extensive experience of Janus Henderson Global Technology team across various market cycle and technology trends. Despite a drop in the tech-heavy Nasdaq 100 in quarter 3, this presents an opportunity for investors to consider purchasing high-quality US technology stocks at a lower price. Growth-oriented stocks such as tech tend to be sensitive to Fed fund rate and US Treasury yield. If rate cut materialize sooner, we expect to see this positivity to be reflected in the technology sector. Given the current uncertain market conditions, focusing on the large-cap global companies with strong cash flow that can withstand potential challenges like a mild recession is considered prudent. TA Global Technology has a commendable track record in Malaysia and is one of the top-performing technology funds in the market. On year-to-date basis, the fund has seen an impressive increase of 23.4%, focused on powerful secular themes for growth such as fintech, Internet 3.0, next generation infrastructure, artificial intelligence, and process automation and electrification. The fund leans more towards FANG stocks compared to RHB Sustainable Future Technology Fund, which is also managed by Janus Henderson. RHBI Sustainable Future Technology Fund is the first Sharia sustainable technology strategy in the market. This fund offers a greater diversification across various market cap technology stocks. There is significant and very broad investment opportunities within the sustainable technology sector to help solve the global challenges. In addition to US tech, both funds also have exposure to Asian technology stocks such as Tencent and TSMC, which are the key contributors to the region's equity market. Since the launch of ChatGPT, generative AI has garnered significant attention and discussion on its commercial potential. It is believed that generative AI could contribute up to $4.4 trillion to the global economy. RHB Global Artificial Intelligence is a niche fund that focuses only on AI companies within the technology sector. This strategy encompasses a wide array of AI-related solutions, managing them differently from a typical tech fund. There are multiple layers of investment opportunity within the AI landscape, and it may just be at the early stage of multi-year growth cycle in generative AI. For investors seeking a more moderate approach, represent the TA Total Return Income Fund. This is a global mixed asset fund managed by Fullerton. This is an income fund where the fund aims to pay monthly distribution of 5% per annum from its NAV. The core strategy allocates 60% to equity and 40% to fixed income, though the fund manager may adjust allocation based on the market condition. Exposure to a specific sector or company can be achieved through means such as allocating to ETF or directly investing into the underlying shares. Lastly, we introduce the RHB American Income Fund. As previously mentioned, the bonds are expected to be the most direct beneficiaries in light of potential rate cuts. This fund offers a yield of 6.59% with a duration of 5.55 years. This diversified portfolio of above 1,000 holdings has its majority exposure in US Treasuries, while the fund manager also aims to create excess returns from sources like high-yield bond and emerging market hard currency bonds. At the feeder fund level, the currency hedging is implemented to mitigate foreign currency risk. The table displays the performance of the fund discoveries for this quarter. As you can observe, there was a pullback in quarter 3, but over the course of the year, the trend was uptick. This presents a favorable opportunity for investors looking to accumulate. Thank you for joining our podcast today. I hope my insight has provided valuable information to help you make informed investment decisions. Please reach out to our relationship manager to explore how this recommendation can be integrated into your diversified portfolio.